This is the weekly video where we catch up with what's been going on with Euro US dollar and Pound US dollar and the big levels to watch in the days ahead. Hello, I'm David Jones. This is the weekly video I do with Capital.com where we look at two currency pairs. We'll look at the euro against the dollar and pound against the US dollar. They've continued under pressure. They've started this week, again, both of these, with the dollar continuing to strengthen and really extending the declines that we've seen for both the euro and the pound against the US dollar. We'll take a look at the charts in a minute, but I think it could be a big week this week. There's a lot going on that could drive both of these markets. First of all, Wednesday morning, we've got the latest UK inflation data that comes out. So we're expected to see inflation in the UK about 2.6% a year. Now, of course, it was a weaker inflation number last time round that made the Bank of England decide, or helped them decide, not to raise rates earlier on this month. And that's one of the reasons why we have seen the pound so weak over the past few weeks or so, that decision not to raise rates. So that inflation data on Wednesday morning will be closely watched. And then something that's going to affect the euro US dollar and pound US dollar is later on. So Wednesday evening, 7 o'clock UK time, we have the release of the Federal Reserve minutes. So the central bank of the US, the minutes from their last interest rate setting meeting. So again, we might get some insight there as to how they think rates are going to go in the future. If there's maybe a suggestion that we'll see a reining in of raising interest rates in the US, that could help the pound and the euro rally. So Wednesday's a big day. But then on Friday morning, we've got the latest UK GDP data. So how well or how badly is the UK economy doing? So I think it's a big week from Wednesday onwards for FX. But for now, these two markets, euro dollar, pound US dollar, are still weak. So let's catch up with the euro chart first of all and have a look at the levels to watch. Let's start off by looking at our euro US dollar big picture chart. So we've got, this is going back over the last couple of years, and you can see the rally that the euro had been in for all of 2017. This year it started pretty much the same, with euro dollar hitting fresh highs. But since then you can see the size of the decline. We're down around about 800 points off those, was it February highs this year, and it's been a pretty severe decline over the last few weeks. We'll look at this in a bit more detail in a minute. So what are the big levels to look out for? Well, you could argue the trend from the end of 2016 is still just about intact. We've got this trend line running up here, coming in around about 117, which is where the market is trading roughly now. So the 117 level could be an interesting one to watch in the days ahead. We've also got the lows from November last year and also December last year. So 117 had been big support in the past. So it's still weak going into this week. But if we're going to see signs of a turnaround, then I think 117 is the first one to watch. The big level after that are the lows from, when was this? Back in, again, early November 2017, ahead of the sort of 115.50 area. But I think the immediate one to watch this week is 117. It's that trend line support, and it's also the lows from towards the end of last year. Let's take a look at the shorter term chart. So this is a 4-hour chart, so each candlestick represents 4 hours worth of trading. And you can see really the severity of the decline. It did start to look at the beginning of May as if we were breaking out of this downtrend, but the market has just sold off again. At the start of this week, we're seeing a bit of strength coming in, but it's nothing to write home about just yet. You know, we need to see probably a rally back up through 120, these old highs from the middle of May, to even suggest this downtrend is running out of steam. Let's take one more quick look at the big picture. So just one quick look at the indicators. We've got the RSI down here, so a 14-day RSI. Not surprising, given the size of the fall. It's been oversold for quite some time. It's still weak going into today. No real signs of divergence where the market's slipping lower, but the RSI is making higher lows. So at the moment, it's still under pressure. It still suggests the market is weak, but the first immediate level to watch are these 117 lows. I think if we break through there, we then have to start looking at the potential for a slip below 116 to test these old lows back here, but I think plenty to watch when it comes to euro dollar this week. So 117 is the big one, but at the beginning of this week, this is a market that is still under pressure. It's a similar story with pound US dollar, and there is also another big level to keep an eye on. So let's take a look at that chart. Here's the big picture view for pound US dollar, taking in the EU referendum from June 2016, the massive volatility we saw there. But since last year, we have seen the pound in recovery, and this did continue up until recently, up until about 6 weeks ago, when the market got within a few points of the 144 level. But you can see, again, like we saw with the euro, the size of the turnaround since then, dollar strength coming back in. We've fallen out of the trend for pound US dollar. And actually at the moment, we're starting this week just below that 140 level. So this is lows for the year so far for pound US dollar. So the weakness is continuing. Just step it forward. It did look over recent weeks that maybe we were making a base, but with the break that we've seen today, I think all the hopes of that have gone out the window for now. So what's the next level to watch? Well, we did see these old lows from back here, December 2017, around about 133. So I'd suggest that's the next big area we want to watch for pound US dollar. We saw a lot of interest in being a buyer here towards the end of last year. So let's see what happens. But at the moment, going into this week, it's a market that is still weak. It started off breaking below the lows of the last few days, so it's under pressure. Let's see how it performs around this 133 level. On the RSI, again, it's been oversold for a while because the market has been sliding so heavily. If we did get a bit of strength over the next couple of days, we do have the potential for bullish divergence on the RSI, where the market starts to push a bit higher and leaving higher lows on the RSI. But it's still early for that. At the time of recording this on Monday, it's a market that is still weak, and we need to see, I think, some sustained strength at the moment. For now, we may well see it turn around, but based on the recent performance, it does suggest there's no hurry to be a buyer of pound US dollar until we get some real confirmation. And the 133 lows are the big level to watch. So the pound has started this week making a definite break between the lows of the last couple of weeks, 134.50, and 133 is the next big support. So it is a weak start for both the pound and the euro, but let's see how the next few days pan out. We'll start wrapping things up there, but as usual, if you have any questions or comments or a different view, leave us a message in the comments down below. If you like the video, click on the thumbs up, and to never miss out on the videos we upload, we look at indices, cryptocurrencies, trading strategy, trading psychology, all this sort of stuff. So just make sure you're subscribed by clicking the subscribe button down there, and you'll get notified every time we upload a new video. But for this week, from me, David Jones, and Capital.com, we'll leave it there, and I hope you have a good trading week.